Welcome back, and we're joined by Aditya Kondawar, partner and vice president at Complete Circle Capital. Great having you, Aditya. Give us a sense, first off, to start off, how are you viewing markets? How are you viewing the Nifty levels versus what the likely growth could be maybe over the next year or two on the Nifty in terms of earnings, which could likely lead to the 1 or 2 year forward earnings, giving us a possible upside surprise? Give us a sense of that.
Hi, Harshbhai. Good afternoon to you and all your viewers.
Good
Thank you for
afternoon.
having me. Getting to Nifty, right? I mean, of course, the past 14 months have been quite. It has been a roller coaster ride, to be very honest, right? And I mean, going forward, if you look at the Nifty PE today, it is close to 24 times, which is closer to its average. Now, if you look at the next 2 years, we are baking in anywhere from a 10 to 12% that will be the EPS growth. And I think Harshbhai, we will see a lot of. We genuinely feel that we will see some surprises over here. If you take the banking sector, for example, I think it is long due. A lot of exports-oriented sector which have faced almost 50% tariffs for the past 3 to 4 quarters. I think they will surprise. If you look at manufacturing and a few other manufacturing-oriented sectors, I think a lot of capex is coming in, and a lot of companies have given aggressive guidances for the next 3 to 5 years, right? So I feel definitely, the earnings surprise can come from banks, manufacturing, auto and auto ancillaries, because as we all very well know, the government has also done its part by cutting a lot of these taxes and spurring consumption in the economy.
All right. So, Aditya, you've given us sectors as well to think through. Kunal, let me ask you, within the banking pack, given the moves this week, and Kunal, it's surprising that we haven't spoken about banks. Is just what I recall over the last few days. But within that banking pack, any chop and change in terms of your top picks or your top bets?
Yeah, I think now it could be a time where large cap private sector banking stocks could make a comeback. So, few of the ratio charts are now indicative that the private sector banking stocks could stand to outperform the PSU banking names. We are seeing traces of that happening. Axis Bank coming back to its previous swing highs. Kotak Bank yesterday was one of the top gainers on the Nifty 50. So that is another candidate. ICICI Bank is now trying to come back to that 1375, 1400 kind of a range breakout. HDFC Bank very close towards its previous highs of 1020 thereabouts. So now you are looking at a point where many of the larger cap private sector banking stocks could potentially outperform the PSU banking names. And if that happens, of course, for the bank Nifty, it will be very positive. But this will also help the bank Nifty to be a lot more constant and varied, because in the last 3 months prior, even though the bank Nifty was moving up higher, it was solely on the back of some stupendous outperformance from the PSU banking names. So now with the private sector banking stocks make a comeback, this would give far more stronger stability for the bank Nifty trends going forward.
Okay, Kunal, we need to let you go. So thank you so much for joining us. Have a great weekend.
Thanks.
And viewers, what we're going to do is slip into a very short break. On the other side, we'll continue coverage, plenty of buzzers, and we'll discuss those with Aditya as well. Stay with us. Welcome back. You're watching Closing Trades, and we have with us Aditya. And in fact, I've thanked Kunal a wee bit too early. We're going to get some insights from Kunal with regard to silver and that big move with regard to silver in just a few minutes. But Aditya, if I were to come to you, talk to us about one sector. You've named quite a few, but talk to us about that one sector where you have the highest conviction on, and within that sector, within that pocket. Is there a tilt? Say, for example, within banking, is it private sector banks and is it the larger ones? Give us a sense.
Sure. So Harshbhai, obviously the first sector that I'm going to talk about is the banking and financial services sector, right? Whenever we talk about an economy doubling to a $7 trillion or in the markets and raise equity, credit is the backbone of every economy, be it China, be it US, and of course, be it India. So, the leap that we will do to $8 trillion will be facilitated by credit purely, right? So, as India goes to $8 trillion, you will see more and more people take house loans. You'll take more and more people take retail credit, more and more corporates borrow for their capital expenditure in the economy, right? So in the banking space, of course, we do like private banks. Some of the PSU banks are also looking quite good. And the best part, Harshbhai, over here is that not just us, but even the FIIs have been taking very large positions and very bullish bets over here. If you go by the news flow of the last 3 months, we have obviously seen the biggest banking deal by Emirates NBD in RBL Bank. Then we have seen the IDFC First Bank deal. We have seen it with Shriram Finance, Samman Capital, right? So uh, I feel that not just us, but even the FIs are thinking that this is going to be the credit is going to be the sector that will actually propel India to a $8 trillion or a $10 trillion economy, for that matter of fact. And just a fun statistic over here, if you look at the balance sheets of banks that are listed in China, they have a balance sheet size of almost $6-8 trillion. If you look at the listed balance sheet bank sizes in the US, it is almost closer to $5-6 trillion. But in India, we don't even have one bank yet which has a balance sheet size of $1 trillion. So if I combine the balance sheets of say HDFC Bank and SBI, then you get a $1.1 trillion bank, right? Now the second one is, of course, it has to be manufacturing, because I think India has done quite a phenomenal job over here, and I feel that not
Interrupt
just the
you.
OEMs, but
Aditya, I'm going to interrupt you there. We'll come
sure,
to manufacturing in just a couple of minutes. We have Kunal
yeah.
standing by. Silver continues.
But let's welcome on board Aditya Kondawar as well and figure out what he's making of the market. While it's turning out to be a good day so far, it's sure been a choppy ride for us. Aditya, hi, afternoon. I guess the question on everyone's mind is, when do small and mid caps pick up? When do you see a more meaningful across the board recovery, Aditya?
So hi, good afternoon. So, I tweeted this a few days back that death by 1,000 cuts is a quote that small mid cap investors have experienced through the past 14 months of the markets, right? I think the biggest trigger that will be there for the markets, and obviously the small mid caps to move, will be the trade deal. Now, fortunately, on that part, a lot of news flow has come from the ministry. Mr. Piyush Goyal has spoken about a number of FTAs that they are in the process of finalizing. Number two, our honorable Prime Minister had tweeted last night saying that he had a warm and engaging call with the US President. And obviously, the CEA and the Commerce Ministry have also stated that if a comprehensive trade deal with the US is not signed before March, they would be quite surprised. And obviously, a lot of back and forth has happened on that front. So we are hopeful that things should start stabilizing in the next 2 to 3 months. And obviously, a quarter or two after that, I think small mid caps should start picking up.
Okay. Aditya, what do you make of the rally in auto, and where are we placed with regard to auto now that this rally is complete? Do you have a preference, two-wheeler, four-wheeler, CV? How do you play auto, or is it through auto Ank maybe, or tires? How exactly do you play it?
So Harsh bhai, auto and auto anks, you also quite very well know that it has been one of my favorite sectors. It has created wealth for me. Uh, so for us, we hold both autos and auto ancillaries, and obviously, none of what I say is a recommendation to any of you. But what the government did was it gave a huge consumption boost or a demand boost to all of these companies, right? Auto being at the forefront of it. In fact, Maruti management has repeatedly said that they have this thing called a helmet indicator. So people who come to their showrooms have a helmet on the sales desk. So that basically denotes that a lot of people are now upgrading from two-wheelers to four-wheelers. But coming to your question, we are bullish on both PV two-wheelers, and we are bullish on both OEMs and ancillaries as well. Because there's a simple calculation that a 1 rupee change in OEM sales would be a more than 1 rupee change for the ancillaries, right? Because the delta for them is much higher. Ancillaries are much smaller companies in terms of market cap and all the other numbers. So obviously, incremental 1 rupee change for them brings about a far greater change in the market cap. So leaning more towards ancillaries, but then again, we are again bullish on OEMs. Yeah.
Right. Okay, hang on there, Aditya. Lots more to talk about, but guess what?
Welcome back, and thanks for staying with us. Now, the insurance bill has received cabinet nod, and that's the big news that's coming in at this hour, breaking on ET Now. Let's quickly take it across to Aditya. Aditya, your view with regard to insurers. What this does is, of course, bring in the optionality for insurers to do life and general within the same fold, which is a key positive for insurers like an LIC. And it also brings in 100% FDI as an optionality. So it brings in new foreign investment into insurance as well. And therefore, that will likely mean that some stakes will be up for grabs, especially in the listed space. Is this a space that you track closely, and any stocks that you're liking from a risk-reward standpoint within that insurance pack?
So to be very honest, I don't track the insurance space, but obviously this is a great news. In fact, we saw recently that Mahindra and Manulife, after their mutual fund business, are now getting together to form an insurance joint venture as well. So I'm sure some reworkings will happen on that front. And like you correctly pointed out, I think a lot of listed companies' stakes would be up for grabs. I think overall, a very positive for the sector.
Let me welcome on board Nitin as well, as we're covering the fact that Cabinet has approved the 100% FDI in insurance. Nitin, prima facie, the impact on insurance as a sector now that the Cabinet has okayed 100% FDI?
Sorry. Hello. Hi, can you hear me?
Yes, we can hear you loud and clear.
Yeah. So I think this was in the works, and most insurance companies, in fact, we had met a few of them just in the last 1 month, are very happy and welcoming this move. If you really look at most of the insurance companies from a perspective, all of them are businesses which generate a fair degree of cash. They are well capitalized as such. So in the sense that, when you talk about foreign, so some of the weaker guys would probably benefit with this FDI move because, they will probably need to beef up the capitalization. But the large private insurers in the business are fairly well capitalized. They have a huge network. So it's not going to be easy for anyone to come in and substitute. But what it is definitely going to do is it's going to drive a deeper penetration, because as you see some of them coming from an education perspective, from a rise in distribution and so on and so forth, it's going to drive more penetration. So as a country, it's very good. But at the competitive level, I find it difficult to believe, at least in the short term, any of the top 5 being sort of disrupted from there. The other element where you have general insurance and life being allowed to be done by the same company, I think that's probably going to give some of these companies a big benefit of scale as they go ahead, because they, now they can use the same infrastructure across both of these companies in terms of costs and so on and so forth. So I think that is pretty well, as in that sense, I think this is very good for insurance. Any which way, I think the worst of insurance regulation is behind us, and we are very positive on insurance as a sector as we look ahead.
Nitin, what else are you seeing in terms of sectors which you're finding interesting?
Well, from a sector perspective, when we look across, we clearly are seeing that one big area is consumption, which should continue to do well in our view, especially led by all these measures. I think this quarter is going to be good. One has to see how this sustains as we go ahead. I think the other element is, banking and financials, and within that, I think we're probably going to see the NBFCs do better, because there was an expectation that there's going to be a bottoming out of the rate cycle in this December quarter, but now it looks like we could probably have one more rate cut, and that so the bottoming out of NIMs for banks could probably be delayed by a quarter or so. So I think NBFCs should do well. I think the capital market players would do well, especially the AMC business will continue to do well. It's a structural compounding story that one sees. Again, power T&D is another area that looks interesting. But at a more larger level, I think this is once again going to be a bottom-up year in the markets, wherein you're going to see individual stocks do far better than the broader indices.
And within discretionary, Nitin, is there a preference or a tilt that you have?
So within discretionary, I think, while at one level, premium discretionary will continue to sort of grow. In our view, it's an all-weather theme because the consumer in that bucket is less prone to the vagaries of inflation or interest rates and so on and so forth. But I think the larger growth is going to come from tier 2 and tier 3 consumption growing. And that is the bucket where even the government is driving tailwinds.
In fact, you know what? I'm going to take it across to my colleague Anurag Shah as well. He's been reporting.
Positive view on the company. They're doing a lot of new age sectors. I think the MD of the company also came with quite a detailed article a few weeks ago saying that, L&T is going to be all about new age sectors. So they're getting into semiconductors, data centers. Obviously, defense has been a big play for them from quite a while. I think they unveiled a new tank as well called Zorawar recently, which is one of the, leading lightweight tanks in the world today. So definitely positive on it, Harsh Bhai. And, when we talk about India's infrastructure story, I think L&T plays a crucial role in it, be it the roads, be it the heavy engineering, or be it defense.
And Nitin, do you have a view? Cap goods, L&T in particular, also there's Siemens. Anything that you like within the cap goods space, ABB and the like?
So I think, where there is private capex plays, I think that you can yet wait it out because there is no clear signal of that happening. I think broadly, if you ask me within the cap goods space, the two clear spaces that we like is what has got to do with power, and that's more specific power transmission. I think that's the area that we continue to like and think there is good room for growth.
Indeed. And also now with the new atomic energy bill, Nitin, do you sense defense is going to once again be in the spotlight?
I think defense is once again going to be in the spotlight. I think it's had a fair share of correction. And, it's if you ask me now, defense is a big long-term theme which will continue to play out. We live in a geopolitical world where you continue to see the unexpected happening more and more often. But I think that's one part of it. But again, even for the nuclear power sector, reactors become very critical. So I think you will once again see some of these large engineering companies catering in the power value chain, being in the limelight.
Okay, shifting focus though. Siemens, on the back of its analyst meet where key concerns were discussed, Kanishka here with more with regard to what was the conversation there. Kanishka, what do you have for us?
Absolutely. So Siemens did hold its analyst meet today, and some big concerns have been highlighted by the analysts that we have spoken to. Let me take you through all of them. First up is that there's no guidance that has been given for any of the segments. Then there's uncertainty on capex momentum going forward, and now within segments, it's the digital industries segment where margins could decline due to their linkage to transfer pricing. Now let's see what's with regards to digital industries concerns. Now this segment's margins, they are now expected in the 6 to 8% range. They're sharply down from that 12 to 14% range. Why? Because there's no localization in this segment yet. These margins are linked to transfer pricing. And apart from that, small India manufacturing is just started. So more localization is planned, but it's very limited right now, and that could hamper the margins for this company, for this segment. Private capex, that has also been weak for this segment over the past 5 years. So yes, those are some key drags this segment and why it matters. Why? Because the DI segment focuses on industrial automation, digitization, and contributes to about 20 to 25% of the top line. So yes, it is significant when that margin growth is likely to come down to that 6 to 8% level. That's the change over there. Apart from that, if you look at capex commentary, it's a mixed stance. The private sector capex, that remains muted. Uncertain if that capex is recovery that we have seen in the past few months, if that's going to sustain. However, they still have pointed out that from April to June, that's when the capex, private capex, could actually start picking up. So yes, some key announcement over there. Apart from that, the stock did take a hit following that 6 to 8% DI segment margin that is expected. But there are some key positives as well, as we have spoken to analysts and they've pointed out that the commentary is largely turning less cautious now over the quarters, especially with respect to capex, since that is going to pick up in the April to June period. Apart from that, smart that's also likely going to continue its 20% growth. M&As and capacity expansion, that could be likely in this segment. And mobility revenue, that is also going to see a pickup. So yes, mobility and smart infra, these are going to be the key drivers for this company. And if you remember, earlier in the week, we saw its low voltage motor business. They are going to sell it for an amount of 2,200 crore rupees. These were the two drag segments, LMV and DI. And now with the sale of this one segment, they are going to get in 2,200 crore rupees. So yes, that's going to be a big capital for the company that it could utilize. So yes, some positives as well, while capex, that remains a key drag, as well as the DI segment, that is the digital industry segment.
Right. Well, not just Siemens, but look at a BHEL, for instance, perhaps more to do with the atomic energy bill getting cleared, because that's the one which is seeing a meaningful move. We were already flagging off for Walchand Nagar Industries. That, of course, is gapped up quite a fair bit. Any other stock, Harsh, that you may be spotting?
Yeah, L&T, BHEL, Walchand Nagar, those are the key high impact stocks on the back of this news. Nitin, I wonder if there are any other counters which you might keep on your radar given this, because there'll be a slew of other second order impact counters which will likely come into the picture because of this, you reckon?
Asking that.
Sorry, yes. Nitin, that was for you.
When you look at it from a second order context perspective, once again, when you set up capacity of different types, whether it's nuclear, whether it's renewable or traditional thermal, ultimately, I think the connectivity is the most important part. And that's where I keep on saying that, one of the key challenges in India is going to be the transmission grid. So I think whether it's transformers, whether it's cables, whether it's EPC companies within that value chain, I think all of them should be the second order beneficiaries of this.
Okay, Nitin, we let you go on that note. Thanks as always for taking the time out, and apologies, just so much news flow. Our conversation got a little truncated, but let me welcome on board Mr. Chakor Doshi from Walchand Nagar Industries.